Okay, as usual on every Friday, I thank Mauricio for this great initiative. So this is the wrap-up for the live market open for Friday, December 4th. Everybody's talking about Mario Draghi's disappointment for stock markets and for Euro bears. What happened yesterday? We had a deposit rate cut only to 0.30, only 10 basis points. That was the minimum of expectations. That was the first rise in euro dollar. Then the big bump came from no new QE. It stays at 60 billion a month, and this hurt the dollar, boosted the euro even more. The QE program was extended to March 2017. That's within expectations, nothing new here. The ECB wanted to surprise us by announcing its reinvesting proceeds, buying a bond for every bond that matures. It has only a long-term effect, and it's not what the markets were looking at. And they did open the door to doing more even in the spring, but after creating such huge expectations and providing such a huge disappointment, it only had a temporary effect of weakening euro dollar, and then the rally continued. Okay, so euro dollar chart, everything looks small in comparison to yesterday's big rally. 460 pip range from the lows that it reached after the retractment of the FT rumor and the highs of the day from 105.20 to 109.80. Now we're seeing a fall, currently at 108.86. We've already been under 108.60 today. Lines to watch on the top side are 110, of course. On the downside, it's 108.30, which is a clear separator of ranges. Further support 107.60, 107.10, and of course 106.30 and 105.30. To the upside, we have above 110, we have 111.30. Okay, in any case, we had a huge rally, and this disappointment from Draghi is likely to echo and impact markets for a long time. What else do we have yesterday? We had positive UK services PMI beating expectations. After a few disappointments, it allowed the pound to recover alongside the US dollar sell-off that came after Draghi. In the US, we had okay figures, jobless claims as expected. ISM non-manufacturing PMI slipped, but still on high ground, including the employment component. Janet Yellen repeated her speech, basically two messages. First of all, rate hike is probably coming in December, unless we have a huge disappointment. And afterwards, it's going to be gradual. Her specific words or specific headline was that a delay to a liftoff has risks. Okay, so that was a key event over for Yellen, but it's something similar that she said beforehand. Okay, today on the agenda we have, of course, the US non-farm payrolls. Headline expected 200,000. Wages are expected to rise only 0.2 in comparison to last month's huge rally, a huge rise of 0.4. That it came out of range. Wages broke out of range last time, rising 2.5. This time expectations are lower. And employment rate is expected to remain unchanged at 5, and the participation rate at 62.4. Real unemployment rate last time was 9.8. I believe that an okay jobs report, even 150,000, even 100,000 would be good enough for a rate hike. Of course, better is better for the US dollar. Watch out, first of all, for the headline number, then for the wages, then perhaps revisions, unemployment rate, participation rate, but number one, headline, number two, wages. Okay, that's the key event for the day. It's not the only event for the day. We have at the same time at 1:30 GMT also the Canadian jobs report. Expectations are low. We have also trade balance and from both countries, but they're overshadowed by the jobs report. And for the Canadian dollar, it's not only trade balance, jobs report, but also the OPEC meeting. No changes expected. These countries in OPEC and the countries outside OPEC are not able to agree on anything. It'll be a huge surprise if they decide to cut production, higher oil, and higher Canadian dollar. But I believe nothing will happen there. Press conference is planned for 3 GMT, but as a comment we had here from Tilan, it might come already around the NFP. We might have some leaks. And last but not least, Mario Draghi speaks at 4:45 GMT. He speaks in New York. Let's see if he tries to fix the damage he did yesterday. For him, it's damage because a stronger euro means weaker exports and weaker inflation. It's not what he wants. Anyway, it'll be hard for him to reverse what he did yesterday. Disappointment not only for euro bears, but also for stocks. Okay, let's cover a few currency pairs. We talked about euro dollar, pound dollar, enjoying good data, 151.15 at the moment. Yeah, chopping around 151.60, 152. On the downside, 150 and 149. Dollar yen, stable 122.80, support, clear support 122.20, and strong resistance 123.60, very well-defined range. Dollar CAD has a big day today, currently well within the range. Lines to watch are 134.60, 132.80, and 132.40. Aussie dollar received some positive news from retail sales, currently 73.25. Also here, very well-defined range of 72.80, clear separator to 73.60. And the Kiwi dollar failing so far to break even higher to above 67. 67.90 is the next resistance, 66 is support, followed by 65.50. Okay, so these are the main things to watch. Markets are still digesting Mario Draghi's big disappointment yesterday. Okay, so that's the wrap up for today.